What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Qualcomm Incorporated, ticker symbol QCOM. This was a viewer's request, and thank you for your donation. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So here we have the daily chart for QCOM, and what do I see that's obvious? Well, I see there was a nice rally all the way from the 104 level up until the 230 level, and then a decent sized drop. It took back most of the gains that occurred. So you see that this can be measured. This was one large leg right here, and the bulls are maintaining support above this horizontal level right over here. So this was prior resistance. You see that price came up to this level, found resistance, sold off. Bulls were strong, rallied back up, found resistance, sold off. Bulls were still strong, broke through, tested for support, and led to a massive rally. Price came back, tested for support, led to a small rally. Price came back to the level once again, led to another small rally. So this is telling me that this level, the bulls are not as strong as they once were, because look what happened when price bounced off it in the past. It led to a huge rally. In this case, it's leading to small rallies. So this tells me that there's a strong, a bearish bias to the chart. We had one leg up right here by the bulls. This was the second leg up, and it looks like they're having a hard time reaching it, the bulls. So they're finding resistance at this level at the 175, but the target is a little bit higher at the 183. You see that it got rejected once right here, and then this is the second time. So this tells me that the bulls tried 2 times to reach it, and they're failing. There's a good chance that they might fail permanently, and we might see a drop down. There is this trend line right here in favor for the bulls, but if that is lost, there's this other one right over here, a little bit more shallower. But again, the shallower the trend line, the weaker it is. So, I mean, we actually do have this one right here. I see that. Yeah, not really. So, yeah, we have that one right there. And then we have a shallower one, but that one might not hold as well either. So, in either way, this is looking more bearish than bullish. So, for the bears, what they're trying to do is make a similar size drop as they once did. So, if we go and clone this, and let's just say this is the top of the correction, then the second leg down would be targeting the $97 level. Now for the bulls, they're not trying to let the bears get down that low. If anything, if bears do drop price, they want to defend that 157, 158 level, and then maybe rally out of here, or just break through this 175 level right now, and then find support from it, and then continue higher, or break through it and then find support much at a higher level. That would be even more bullish. So as of right now, this is setting up for another drop in the future, breaking that trend line, coming back down to this level right here, and potentially breaking that as well. So that's what it's setting up to do, because the bulls are not able to rally off of this level by a significant amount. But again, things can change, right? The bulls still have this trend line in favor for them, going for them. So they can still push up one more time. And if they do break through the level, again, then it can change to being a bullish bias instead of a bearish bias. But as right now, it's leaning more towards the downside than the upside. So that's everything I see on the daily chart. There's a lot of gaps that can be filled as well on the way down. There's a big one right over here, a couple small ones over here. So those are potential targets as well. And again, it looks like it's trying to drop down lower. Let's take a look at the weekly chart, but it's not guaranteed. Nothing's guaranteed in the market. You just have to go with the information you have right now. And the information that I have right now is telling me that it's setting up for a decent sized drop, at least a small one, and potentially even a larger one in the long term. Let's take a look at the weekly chart. Here's a look at the weekly chart, and you see that if I zoom out, price did make an all-time high just this year, a new all-time high. It looks like there could be a parallel channel in play. If you connect the swing lows, maybe something like that, drag it up to the highs, and look what you get. You get price has 3 connections on the bottom, counting the initial point, 1, 2, 3. You drag it up to the highs, and without even seeing the right side of the chart, you can see that's where you can definitely have this channel in play with just the 3 in the bottom and the 1 on the top. And then if you drag it across, look what happens. Price is going up. Look on the right side of the chart. Price is going up, and then boom, it hits the channel. So you already had that in place. And the channel was just one thing you could use. You could also use this leg up right here. This is all one large leg right there. This is the largest impulse in the past. And then, recently, that you can use, and this is the second leg up, and you get the target right near that level. The target was 237, price hit the 230. With the channel in play, there was going to be a large drop expected at this area, especially far away from the EMA as well. So you had three things telling you that price was ready to correct lower. The first thing, we had the measure move target very close. We had the channel highs, which, if you know the channel rules, price hits the lows, it goes up to the top, price hits the top, goes down to the lows. And then the third thing was the overextension from that EMA. Price does not like to be far away from the blue line for a very long time, and it was definitely overextended. So an overshot, you could say, or a climactic point. Now price had a decent sized drop. It pushed right through the EMA. Now price is below it, and it's looking like it's setting up to reach the opposite side of the channel, potentially even lower. So again, it's setting up to go lower. It's not guaranteed. Like I said before, it needs to break that 158 level first. But either way, it's setting up to go lower. So that's all I have on the daily and weekly charts. Let's see what happens. I would be bullish if we can get back above the 175 level and stay above it. If we just push through, that's a good sign. But if it pushes through, comes back to the 175 level and holds it, or if it doesn't come back to it at all, that's even more bullish. But if it does come back to it and holds it, then that means that the bears failed to go lower, and we're most likely going to see a rally continue higher. But again, right now it's setting up for more downside, short term and long term. That's all I have for Qualcomm on the daily and weekly charts. If you guys have any questions, please leave them in the comments down below. This is Vee Trades, and thank you for your time.